When Warren Buffett said, "Risk comes from not knowing what you're doing," he nailed one of the most important truths about trading. And that's where this chapter comes in. Trading isn't guesswork, and it's definitely not gambling. If you want to survive and thrive in the financial markets, you need to understand them inside out. Market knowledge is your battlefield awareness, your map of the terrain, your compass in the storm. Without it, you're just wandering blind. With it, you're navigating like a pro. Think of it this way: when Peter Lynch said, "Know what you own, and why," he wasn't just talking about long-term investing. He was pointing to something deeper, the idea that knowledge gives you control. The more you understand the environment you're operating in, the less you're reacting blindly and the more you're anticipating what's coming next. So what does this mean for you as a trader? It means learning to recognize market cycles, the rhythm of expansion and contraction, boom and bust. Markets breathe, and if you can learn to hear that rhythm, you stop getting caught off guard. You know when optimism has gone too far, and when fear is starting to create opportunities. It also means understanding asset classes, because stocks, forex, commodities, and crypto don't move the same way. Each one has its quirks, its drivers, its vulnerabilities. The trader who understands those nuances is already 2 steps ahead of the one who treats everything as just the market. Economic policies are another piece of the puzzle. Central banks, fiscal decisions, new regulations, these things don't just sit in the background, they move markets. When interest rates shift, liquidity shifts. When governments change their spending priorities, sectors boom or bust. If you're tuned in, you're not shocked when prices swing, you expected it, maybe even positioned yourself for it. And then there's history. Studying historical data isn't about living in the past, it's about recognizing that markets have memory. Patterns repeat, not perfectly, but often enough to be useful. Whether it's the recurring shape of a business cycle, seasonal tendencies in commodities, or how markets typically react to certain events, history becomes your crystal ball, but knowing the battlefield also means knowing the players. Retail traders, institutional investors, hedge funds, market makers, each one has a role, each one has an influence. When you understand who's driving the action in a given market and why, you stop being surprised by sudden moves and start seeing the logic behind them. And don't forget sentiment. John Murphy put it well in Technical Analysis of the Financial Markets: markets mirror information and emotion. At the end of the day, price action reflects human behavior. Fear, greed, euphoria, panic, they all leave fingerprints on the charts. If you can read the sentiment, you can read the market's mood. And that mood often shifts before the headlines catch up. Seasonal trends add another layer. Maybe it's commodities rallying at certain times of the year, or the well-known patterns in stock markets like sell in May. Seasonality won't make you rich on its own, but ignore it and you're missing part of the story. Liquidity, too, is essential. A market with deep liquidity offers smoother trading, tighter spreads, and less risk of slippage. A market with thin liquidity, on the other hand, can whip around unpredictably, with small orders causing big moves. If you don't know the liquidity dynamics of what you're trading, you're playing a dangerous game. And then there are the rules. Regulations change, and when they do, markets react. A new law, a tax change, a ban on short selling, these can reshape the playing field overnight. Staying informed keeps you from being blindsided. Finally, there's the language of the markets themselves. Learning the terminology might sound basic, but without it, you're always on the back foot. Markets have their own vocabulary, and once you're fluent, you can absorb information faster, communicate clearly, and spot opportunities others miss because they don't fully understand what's being said. Now, let's pause for a moment and look back on what you've mastered in this chapter. You've learned to see the market as a living system with cycles and phases. You've started to recognize the differences between asset classes, and why treating stocks the same as forex is a mistake. You've seen how economic policies aren't just background noise but drivers of price. You've learned that historical data is more than old numbers, it's a guide to the future. You understand that participants matter, that sentiment matters, that seasonality and liquidity matter. You've become aware of how regulation shapes the landscape, and why knowing the language of the markets makes you quicker, sharper, more adaptable. Benjamin Graham, the godfather of value investing, said it best: be an investor, not a speculator. And that's what market knowledge does for you. It transforms you from someone rolling the dice into someone who's calculating probabilities, weighing evidence, and making decisions with clarity. You've now built the kind of market knowledge that separates amateurs from pros. You're no longer just staring at price charts and hoping for the best, you're decoding the cycles, tracking the impact of economic policies, and understanding how every participant, from retail traders to institutional giants, shapes the battlefield you're trading on. You've learned to spot sentiment, respect liquidity, recognize seasonal shifts, and keep an eye on the rules of the game as they evolve. This isn't just theory, this is the foundation that gives you the confidence to anticipate instead of react, to play offense instead of defense. And remember, as Warren Buffett warned us, risk comes from not knowing what you're doing. But you now know. You have the playbook, the awareness, and the insight to trade smarter, sharper, and more prepared than ever before. At the end of the day, strategies will evolve, markets will shift, but knowledge, real, deep market knowledge, is your edge. It's what keeps you grounded when others panic and what helps you act decisively when opportunity appears. And now, without further ado, let's step into Tip 81, Understand Market Cycles.
Thank you for listening to the Ultimate Trading Guide for Novice Traders, brought to you by bellsforex.com AudioWorks. We hope this chapter has given you the insights and confidence to start your trading journey with purpose and discipline. Stay curious, stay disciplined, and keep learning. Your trading success starts here. If you find value in this video, don't forget to like, subscribe, and turn on notifications so you never miss a trading tip. Your support helps us grow the channel and bring you more free trading education. And of course, share this with anyone who's starting their trading journey. It might be the nudge they need to trade smarter. You can visit bellsforex.com to access the complete guide for free, or grab your copy on Amazon in Kindle or paperback. Until next tip, trade smart, and trade confidently. Happy trading!